Hello and welcome to our weekly trading show to kick off your investment week. Good morning in the United States, hello in Europe, and good evening to our viewers in Asia. As always, we will show you what's on track for our trading week, what we do have on our trading plan. We today is, of course, my good friend Rudi. Hello. Very interesting trader living in Japan most of the year, even though he's a German trader, just as I am. Of course, my dear friend and the CEO of xTasyTraders, Gilbert.
Hello.
And my name is Martin Gersch. Okay, so let's just kick off the week. I'm going to show my screen so that you can see where do we have it? Here we are. Yeah, this is where we want it to be. Okay, nice. So once again, welcome to our weekly trading show. Before we kick off, we have to remind you of the risks of trading. It's very important that futures, stocks, and option trading, of course, involves substantial risk of loss and is, of course, not suitable for every investor. What we will show here today is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security mentioned. We are no financial advisors. As we are all traders and not analysts, we put our money where our mouth is. So we may hold positions or plan to take positions in one or more of the markets that we are analyzing today. What's important for you is definitely know your own risk tolerance, know your trading time frame, and act accordingly. Okay, so I think we kick off the week with crude oil because this is really interesting at the moment. Normally we take a look at the stock indices, but as we do have Memorial Day today, our greetings go to all of the soldiers that lost their lives in serving for the United States. We really appreciate that. Okay, so the stocks do not trade today, so we take a look at crude oil at first and afterwards at the dollar index. So what's interesting in crude oil is that demand is still picking up, as we can believe what the analysts are saying. So demand is picking up. That means in the last week we saw that the crude oil inventories came in smaller than expected. The forecast was about 1 million less barrels in the inventories. We did have 1.6 million barrels less. So demand is a little bit stronger than expected. And when we take a look at the chart, we can see on the daily time frame that we had like 5 sessions in a row with rising prices, and then we had a little pullback on Friday. This pullback is nothing to worry about as far as I'm concerned. I really like this pullback because the price was rejected near the high of the year. So the last high here was around $68. This is in fact the highest price we have seen since, let me think, I think October 2018. I'm not too sure, but around the last 2.5 years, that's the highest price we had in crude oil. So the price tried to break above 68 on Friday, but got rejected a little bit. And as you can see today, the steam is already picking up again, and the price tries to break above this 68 level. If we take a look at the weekly chart, what I really like here is, let me show you, this is something like a cup and handle we do have here on the weekly chart. So this is one of the chart formations I really like to trade because we do have a high grade of being correct. if we trade the breakouts to the upside. And what I also like is the price targets we get from this formation. So we take the height of this cup and just project it to the breakout level, and then we are somewhere around $77 as a long-term price target here for crude oil. So there's a lot of dollars to make in this market as far as I'm concerned, as long as you stick to the long side of the market. So on the daily, we can see like nearly the same. This is the cup, and here's the smaller handle. Really like this one. Also, we can see that the 50-day moving average is a support every time that the market touches this level. It's support. Last time we had it here around mid of May. Prices were touching the 50 MA, and then buyers came in again, and we had a really strong bullish movement in the crude oil market. So actually, I really like this. We could take a look at the commitments of traders as well. If we would do that, we would see that the short-term hedging action is bullish as well from the side of the commercials. So as far as I'm concerned, everything is in line for seeing rising crude oil prices in the near future. Okay, so that's my view on crude oil. Next one is dollar index. It's also very, very interesting. As we can see, I insert the 20 EMA, so the 20-day exponential moving average. We can see that the market is really crawling down here and got rejected every time it's reaching the 20-day exponential moving average here. And on Friday, we produced something that's called a pin bar. So it made a breakout above this last high here. Let me just see that I can show you here the last trend. This is the last trend sequence. So this is a downwards trend on the daily, and we saw on Friday that prices tried to move above this last high to break this downwards trend, but they really got rejected here. We got a lot of selling pressure late in the day, and all the gains that the price made on Friday were taken away till the end of the trading day. So that's what we call a pin bar, and a breakout to the downside would be bearish. This goes in line actually with, just get rid of these. So let's just grab this here. Okay. If we take a look at the weekly chart, we can see nearly the same. We do, since March, we do have a strong downtrend. And what I like here is, let's just take this one for drawing now. What I like here is the kind of retracement action that the market is showing. So that's the trend at the moment. And what I like is that the retracements are always testing around the last low. Yeah, here we have the same test of the last low and then just break down again. So on the weekly chart, prices fell below the 10-week moving average, what is in fact bearish. We had these bear flags here in the market, bear flag on the weekly, here bear flag on the weekly. We had a bigger bear flag here on the weekly, but actually the market broke to the downside every time, and after breaking down we made new lows. We have a new low here, we have a new low here, and now I'm expecting that the market, after breaking down to the downside, is generating a new low here as well. So my price target for the dollar index is below 89. This is in line actually with the seasonality. If we take a look at the seasonality, let's just get rid of the 20 EMA. So that's the prediction of the seasonality for about over the last 15 years. So this, if we take a look back on the last 15 years, that's the move we could expect from the last seasonalities. And we see that there's a lot of downside still possible in the market. We do have a bearish bias from the seasonality until end of August, mid-August, end of August. So this is preferably a weak market here in the dollar index. So the first target would of course be this last low here. This is 89.20-ish somewhere, and if we get to the next level, this would be down here like 88.20, 88.25, somewhere around here. This is the next big line of support. Combined with the seasonality, it would be the first move down to the last low, then rejection, yeah, maybe something like a bear flag again on the daily. Like the market could be bear flagging down here, and then with the next breakout we could reach 88.25, 88.20-ish, somewhere here down here in this area. So I really like this long-term or mid-term setup, and this one combined with this pin bar we had here on the Friday. So if the market moves below the low of Thursday maybe, this could be a good entry point for a short position. On the dollar index, price targets, as I've shown, first one around 89.20-ish, second one around 88.20-ish. Okay, that's it so far from the dollar index side. So let's move on to Rudi. I think Rudi is next. Rudi, just show us what you have in mind for the coming week of trading.
Yes, of course, I will do so. I have a currency as well because today is holiday, so I think it's a good idea not to look only at the stock market, but also see something different. And I have something different indeed. It's something really different. It's a little bit an underdog currency, a minor maybe, but I think the chances are quite well that this is coming out really nice. And I switched to my screen so that you can follow this. The reason why I named this one is it has a nearly perfect situation currently, and I want to explain a little bit in more detail what I'm looking for when I'm checking the markets. And this is a little bit more complex. The other one I will show you later is a little bit more the easier one. So whatever you like, whatever you prefer, you can stick with it. So let's switch to this one. I will turn off my cam so that you can just see my screen, and the situation is like follows. We had a long-term uptrend here in the New Zealand against the Swiss. Oh no, my God! Here, too many currencies available here. So you can see New Zealand dollar against Swiss franc here in the upper part. On a long time, you can see it's an uptrend, and you can also see in a daily chart. Here is this one on a daily chart. This is a really, really corrective pattern. I really love things like this because I don't like to trade these, but I like to see them because they are indicating, we have a new direction. What is the direction? The direction is clearly, in this case, to the downside. Wherever you measure to the lowest point or to the last point, it's a down move, definitely. So it's a downtrend, but you can also see it's not really strong. You can see this by just comparing the counter moves within this movement, and this is so much overlapping. We are always constantly overlapping parts of the previous. You can see they are always sharing the same price area here, and also currently until here, even if the market is continuing to new lows, we will have another overlapping situation. This is a clear indication for this is the weak move. So if this is the weak move, whenever this ends, we can think of a continuation into the strong move, and the strong move, the long-term or longer-term trend was up. So when ending this pattern, then we have a chance to enter the market long. But in this case, I won't recommend necessarily to enter the market on the long side here at that point, just for you to compare this with your screen. It's 23rd of April, the high roughly around this level. We have several highs here around this level here. So this might be a good entry to enter for a long position, but I have something more detailed. So when you have a look at this end here, and we check this here on a lower time frame, the 4-hourly chart, I make it a little bit easier to follow with the hourly chart maybe. You can see that we have a strong move to the upside. This is the strong move to the upside currently, and you can even break it down to roughly something 5-wave pattern move, and this is something I really like to see, because 5-wave pattern moves with no overlapping, you can see roughly we had here some break, we had here some break, but there's a big difference or distance in this case between both of them, so there's no overlapping. So this means this is the stronger move. This is definitely a strong move, an impulsive move to the upside. So whenever we will see something like a shaky move to the downside, or at least an ABC pattern to the downside, we can think of a continuation to the upside. And before you get confused, I will of course delete everything in a second, but you can see this is a really typical way of trading. This is the same idea we had here on a bigger time frame, but in this case, this is the strong move. This is an ABC. Always have in mind, corrective patterns can look like a shaking very often with overlapping situation, or they can have something like this, something like an ABC behavior. Both is valid as a corrective pattern, and both is helping us to identify which one is a strong and which one is a weak direction. In this case, it might be, it's not given yet, but it might be the lower, the downtrend, which is the weak one. So if the market later, not now, is pushing through this level, is giving us a long situation. So this is working hand in hand, because if you have a long position here, you can of course keep the position, not necessarily closing the position when reaching the one-on-one projection area. You can keep it and say, hey, wow, when I'm reaching this level here, we can just show it in the other chart as well. We are so close, or maybe depending on where the low is, we are maybe even a little bit above these trigger level here, so we can keep the position and think of keeping it until, let's say, 0.68 or something even above that in a continuation of the bull market in this case. But I'm not talking about this now. I did already, but it's just for your training. But now I'm talking about exactly the same, but on a lower time frame. And that's the beauty of the charts, that you can see this in so many time frames. So if you prefer to trade the big pictures, no worries at all, you can handle this the same way I told you before. But if you like the medium term or the short term trading, if you prefer this, you can of course deal it the same way. Now we are switching to the 15-minute chart, and exactly what we've talking about here, we had the same situation here on this end in a 5-wave move to the downside. You can see this break and this break, there's a difference. So you can see, oh, this seems to be a strong movement so far. And maybe you remember that I told you before that something like this needs to occur to bring us into an ABC corrective pattern. And the funny thing is exactly what we have here on the left side, but into the other direction we have currently with this way to the upside. So we have now a situation, a really nice situation, that this is an uptrend, but this is obviously a weaker one compared to this one. So I bring it up for you so that you can follow it easier. This is a strong move to the downside. This is the weak move to the upside currently. And whenever the market is plunging through this level here, we can expect that the market will continue, maybe in the same speed, maybe in the same size like we've seen before. This is something very typical. Sometimes it's a little bit slower. I'm not 100% sure this will be the highest point here. It might be that in the next few hours or minutes or hours, the market will overshoot a little bit. So then we have to redraw this, not mentioning this level here, but the new coming uptrend. As long as it's not too high, maybe in the wake of the trend channel, for example, then we can expect that the market has a continuation to the downside when the market is pushing through this level here, which is the low from today at night in European time. So it's Sunday evening in American time and in the morning hours in Asia. So when you see this level, the market is going through this last level here, then we can expect that the market will continue to the downside. So I really like charts like this because they are giving me a really good idea what the market is doing currently, and it's a clear picture. Everything is fitting together. You keep in mind we have a bullish situation in this because the stronger moves were here and the shaky moves were here. We have an idea where to enter the market, for example, at that point in this time frame, but we can fine-tune it a little bit when we have the ABC situation here as well. After the 5-wave move to the upside, we can enter at this level, which might be roughly around this level, which is way cheaper to come into the market. And on the way to this pattern here, we can expect when the market is plunging through this level that we will see an intermediate low here. But you should keep in mind the overall picture, the big picture is more for the north side, so more for gaining higher prices. So in this case, I would not keep this position too long. I would set my target, my profit taking target here. It's a buy limit order to close this position around my area here, which is roughly, it's not exactly given now, it's roughly at 0.6476, for example. Depends a little bit where the high here will be, but then you can just estimate by just copying this length to the lower prices here, and then you have an idea where this level is, and you also have an idea, a raw idea when this will happen, because it's not necessarily the same speed. It can be an area typically which is something like this. It can be a little bit longer by time. Why? Because sometimes we need for the breaks a little bit more time, so it can be something like this. This is just an idea. It's not given exactly the way I drew it, but you can see this might be the outcoming of this move. But it's really important to see whether this is plunging through this level or not. So it's not recommended to go short at that very moment in this time here. Wait until the market is coming through this level here. If you're more experienced, just to give you a last idea on this one, you can of course search for something like let's say cluster situation, when you have several lines here, for example Fibonacci levels here, several ones. It might be useful to have an early entry roughly around this level. We have a cluster here of 2 levels, we have a cluster here of 2 levels, so I think we have quite a good chance that roughly around this level here there's a chance for a turning market. If you're a little bit more aggressive and you don't want to wait too long, you can just try it out. Please keep in mind that the risk-reward ratio is way in favor if you do something like this, but on the other side the probability of a profit is way less, because the chances are higher that the market is saying, haha, a bad idea to turn short because we will continue. So this is giving us a better indication that the market will continue to this low point, because sometimes the market is not reacting on this and just going away. So that's the reason why we normally use a trigger. So I think this is giving us a lot of opportunities depending on what time frame you prefer. This is something I definitely will have in my eyes for the next hours. But now I have my eyes on Gilbert's charts, and I'm really looking forward to hearing what he has to say.
Yeah, thank you, Rudi. Switching on the cam. Good. So what do I have in my pocket today? This is, the first one is Huntington Ingalls Industries. This is a company which builds and maintains aircraft carriers, submarines, unmanned submarines, and non-nuclear combat ships. Currently, US and many other nations are strengthening their naval power. The global market for unmanned submarines will be doubled from 2020 to 2025. So there is a lot of increase going on for what reason ever. Recently, HII secured an order for 2 unmanned submarines, so-called unmanned underwater vehicles, UUVs, from the US Navy. And 4 analysts have corrected their earnings estimates upwards in the last 60 days. So they are also getting support from analysts. And the average EPS estimate has increased for about 70 cents to $12.80. So what does it mean and why is it interesting for me to have a look at HII? The reason is, let's have a look at the monthly chart. Yeah, in the past we had here a high, and then we had a very strong sell of this stock down to 140. And yes, we were here quite climatic at this time in September last year, and now we are in a very neutral space here in the climatic distance indicator. So we have a possibility of up move also to get into a climatic area which is pointing to the north. So yes, this is basically the situation in the monthly chart. What is in the weekly chart? So in the weekly chart, we see here the up move. We just have a look if I see any signals here. Okay, no, we have here a stairway, but nothing into the long direction. But what and this is why I've selected it. We see here the weekly SMA 200, and the market went through this line here, and now it remains above the SMA 200. What we also see in the last weeks that we have here a correction into the side, but we also see candles with long bottom tails, and this one is our 8 train pattern basically on a weekly, and this is why it came into the focus, because it seems the SMA 200 is no resistance. It went above, and now it's really a strong sign into the north, into the long direction. At the daily chart, we see here a so-called stairway pattern, which means this is a correction into the sideways, and we came up here quite a bit already, so the market reacted. To just show it a little bit better, my guys are chatting again. And yes, so this is currently the situation, and we have here a resistance area in this at around 220. So what does it mean now for us? We see when we open the bed here, let's switch on the SMA 200. So we see here, this is the SMA 200 on the weekly basis. So we are quite a good above this SMA 200. So what would be now the best to do with this stock? If we are looking into the history, we see here resistance area, which I've just drawn before in the monthly chart. So basically this could be, of course, a point where the market could go based on the fundamental analysis of the good prognosis for the next weeks, months. We see here quite a strong up move up to this level, to this about 220. And if we are now taking this one and projecting it to this low here, we also come somehow into this area. So this might be a good point or a good price where the market might come back. So where we already have been in the past at around January 2020. So here I also wanted to show you something about risk management, because what is the point to get in here? There are two different possibilities. I'm just entering an order here with about 1,000 US dollar risk. And let's assume that the market is really going up here. And this is also why location points and location point trading, because the entry is always on the decision of one candle. Should be, basically. So if you look at this, and we would, for example, take this candle here, and just a moment, so would get in here. So if we take $1,000 risk per trade, so we would get 200 shares of HII, and if we would come into this area here, we have a chance of 11,688 US dollars. Now, if we would go to the secure point, or if we would take the weekly, let's have a look here, the weekly candle. I'm just opening this one. And if we would take this weekly candle here to get in, so this one, we would just get 5,429 US dollars anymore. So this is just that you see how important it is to get in very, very tight into the market, because there you are always getting the order size and you are calculating the risks. In our case, if you have a look here, there is one candle which seems to is very interesting for me, because here this candle already is a correction. So we went up, the market came down, corrected, and we just saw a reaction out of the SMA 20. So if we would just take this candle now to get in with the risk of $1,000 around, the profit could be 27,540 US dollars in this range. So nothing has changed on the target. We just changed the entry, and of course this is a very aggressive entry here to get in this market that tight. But of course one of the possibilities, or one of the advantages of the location point signals is also if the market goes up here and gets away from this candle here, you immediately can put the stop into the break-even stop, and you would be out of risk. And whatever the market is doing afterwards, you just could be stopped out here at this point with no loss. And this is why it makes it quite interesting to go for these patterns, because you have always an extremely tight entry, and you can move your trade out of risk extremely fast. And of course, if you're getting stopped out, you will see another possibility to get into the market if you really see that this market works out. So the next correction is coming. So this is always, it's not the most important thing to be in a trade. It's most important how to get into the trade and how tight your risk can be set. Okay, this is HII. Yeah, just would say, giving over to Martin. Martin, what do you have on your list?
Yes, thank you. So I'm just showing my screen. This one here. Okay, thank you very much, Gilbert. Very interesting. Nice company. Definitely worth a look. What I have for this week in terms of interesting stocks, The first one is Houlihan Lokey. Maybe some of our listeners outside of the US don't even know the company, but it is quite big. Market capitalization at the moment is around $5 billion US. And well, what they're doing actually is it's an investment banking company that provides merger and acquisition and financial restructuring advisory services. So in the end, this is what makes it quite a, let's call it a safe stock. We can see revenue is rising on a year-on-year basis. Revenue is rising on a quarterly basis. Last quarter was a little bit less, but actually we do have had the COVID crisis. So I think these are really strong numbers if we take a look at the overall situation from the last 1.5 years. There were a lot of companies that were really struggling, and actually that's one point where HLI profits from as well, because they are also taking care of big insolvencies. So this makes it quite a safe, safe structure that they have, because they do have work in good times, when everything goes fine, and maybe one or other company just wants to restructure a little bit. But they also do get a lot of jobs if it's not going too good for the companies. So if there are insolvencies or companies urgently need financial restructuring, this is where HLI comes into play, and that makes the company, I think a little less volatile in the overall market. We take a look at the chart and just pick the last really bad situation for the stock market that has been here around February and March last year, where we had the let's say the peak of the COVID crisis here down to the mid-March, and we saw, of course, the stock came down with the overall market. There was really pressure on the worldwide stock markets, and also HLI came down here. But as we can see, it took them a little bit more than a week to get above the pre-COVID levels again. So this shows, even if the overall situation is not too good for the stock market, HLI still shows up a strong performance, because there's work for them in every market situation, and that's why I really like the stock long term. But at the moment, I also like it short term, and we can see it here on the daily chart. This was after the last earnings, and we saw it. We had earnings beat here for the first quarter 2021. Earnings per share were much higher than expected by the analysts. Expectation was around $1.14 per stock, and it came with $1.51 per stock. So that's really a big beat. The quarter before, there was an even bigger beat, but investors liked the numbers. As we can see here, they really put buying pressure on the stock. And what we're seeing at the moment is this nice triangle on the daily chart. This is even good for a short-term trade. So if the market manages to break out tomorrow to the upside, it might be a good idea to get into a long trade in this equity here. So concerning price targets, it's quite easy. We just take the height of the triangle and put it on the breakout level, and there we are, $78, $79, somewhere up here. This would be the short-term price target just for the breakout of this triangle. And I really like it because we saw strong volume in this up move, really strong volume here in this up move. You can see the volume down here. And then we saw declining volume, and I really like declining volume in corrections, and this like a triangle kind of correction. It's just a market correction. There are two ways that markets could correct. One is through price, and one is over time, and that's a correction over time because there were no really big setbacks. What we saw here as a retracement wasn't even a test of this breakout level down here. So that's really strong. It's a bullish sign in the market. We see the RSI is really strong. We can see the RSI on the weekly way above 50, still rising. I like this as well. So that's why I really like HLI on the long side at the moment. So as I said, short-term traders could use this breakout to the upside from the triangle after this big earnings momentum move. Longer term, speaking for longer term, let's take a look at the monthly chart here. This is the monthly chart. You can see from the first day on, market is moving in the upwards direction. I see the price targets somewhere around maybe $100, 110. This should be possible for the stock as we take a look at the movements and yeah, what would be like a fair value to what they are bringing in the market. So long-term target is around $100, $110. Short-term target around 78 to 79 for the next push to the upside. So that's a very interesting one for the long side as far as I'm concerned. So now please, Rudi, show us your next next target for this week, the next trading target for this week.
I will just send over the chart to me and I can introduce it to you already, because this time it's a little bit easier and not so much explanation. It's a little bit easy because the chart is giving us all the information in one glance, at least me as the trader of this kind of signals. It is the blue bars. You can see them on many charts. We have invented it. It's not really special, to be honest. It's just giving us a small edge against what can happen, so the chances are quite high. In this case, we are not so much looking for which direction is the market moving. It is more like no matter which direction it is, the most important thing is it needs to be fast. So in this case, it is a looking where's the strong move and the direction we will see depending on the breakout. So let's switch to the chart. I will turn off my cam so that you can easily see what I'm doing here. And in this case, you can see we have this on many time frames, on a daily chart and intraday charts and wherever it is. These things, they are really nice because they are scannable. It's easy, the computer can find them. And you can see, for example, if you have things like this, it's really easy to find these situations. And very often they are at turning points. Also at the Nasdaq, New Zealand against the Swiss franc in this case. But let's switch to the stock of my choice for this. It's Rad Laboratories in this case, and we have exactly this situation here, and I don't want to talk too much about this. It is very easy. Whenever we have this, it's just waiting for a breakout. We don't know whether this will be on the upside or the downside, but when the next breakout will be and the direction of the next breakout is something we want to trade. In this case, it's quite easy. We just wait until we reach the same distance again. It's really easy. It is simple as it is. It's not really sophisticated. It is just taking some money out of the market. It's not a very high chance to make profits, but the good thing is it is a little bit below 50-50, but you can see if this is the profit and this is our stop level in this case, we have a better than 2 against 1 risk-reward ratio. So even with the 50% or small or slightly below 50% probability, we will have some profits out of the market. You can see here it worked wonderful. Here it did not work so well because the market tried this way, tried this way. Here it worked wonderful. Here it worked wonderful. So you can see roughly the idea behind that is really, really easy. And in this case, giving us two opportunities to enter the market. When the market is going through this level here, we will buy. Initial stop for this will this level here. Will be this level here, roughly below the 600 US dollar, and the target is 639.42 in this case. And the same on the lower end here, when the market is plunging through the lower end of the blue bar here, then we can sell short the market, expecting the market to at least reach this level. Sometimes it's way more. Some people like this trading idea and say, I'm staying in, just taking profit here, half of the position, and keep the rest until it's turning around. Or some people have different approaches with many targets here, taking profits step by step. Or some people are still or thinking of piling up positions. That's your choice, of course. What we do is really, really simple. We have tons of signals like this. So we like this because it's giving us a good extra profits on our account. Of course, also this is not bringing profits all the time, but you can imagine if you have a lot of these signals, knowing that the probability and the risk reward ratio is doing into your favor, you have a good expectation that the next trades will give you some profit. So this is what we have here. I don't want to talk too long about this one because it's really easy. It's simple like it is, and it's my recommendation or my idea for my trading. It's not necessarily fitting into your needs because this is on weekly base. So we will have this for the next few days, or maybe even sometimes few weeks. You can see sometimes it takes a week until the entry, but then after a few days we will reach to the target or near the target, depending on how fast the market is. But the idea is after the breakout, the situation will accelerate, and the market will reach this area soon. What we do here with the trailing stop is we just trail step by step or bar by bar here. In this case, that's an easy way. Some of our clients, for example, they say, no, it's a nice idea to switch. When we are near the target here, we switch to a smaller stop level. For example, you can use super trend on a lower time frame, daily chart or 4-hourly chart or something like this. And so that you don't need to have or put too much risk on your trade here when the market is near your target already. But these are easy ways to adapt to your own needs. In my case, we just keep the position running and just trail step by step with on the lowest end of the bar. The funny thing is, if we are triggered here on the long side and we will be stopped out, we also would trade the short side. So in some cases, we trade both sides. Very often when not reaching the target with the first trade, with the second trade, for example, to the downside, we will reach our target. So we will overcome our loss we have here on the bull side. So this is helping us a lot. Sometimes, like in this case, we have both sides in the negative way. We have a filter on this, but I think I don't want to spend too much time now because I want to hand over soon. We sometimes not trade all of these signals, but I tell you next time. In this case, this is a valid signal for us, expecting a trade when the market is leaving the blue area and reaching at least the blue lines here. And I can make it a little bit bigger so that you can easily read. Maybe you have a screenshot or you pause the video, whatever, to see where the levels are. If you want to follow the idea and follow the results after some time. So I want to switch over. I think Gilbert is the next one. Are you well prepared for your next explanation?
Yes, I am. Okay, just taking over. Here show my screen. Yes, good. Yeah. So my next symbol in my bucket is Fortive, FTV. Fortive is a US conglomerate corporation, somehow a holding. They're having quite some subsidiaries. in the measurement and in the mechanical engineering area. The reported earnings per share for Q1 are 63 cents, and this is therefore against the last year increase of 37%. The revenue increased for about 13% in the different sectors. They're supporting 9.5%, 14%, 20%. And for the year 2021, also the net income was adjusted into the range of 250 to 260. The core growth will be about 7 to 10% for Fortive as the holding. And yes, the adjusted operation profit is expected between 22 and 23%. So quite a good profitable company. Let's switch over to the chart. Why is it in focus? Yeah, so here we see a strong up move also from the pandemic crash, recovered quite well, went on a monthly base up. We are here in a somehow resistance area. We see this candle, so it seems since the next candle now turns out to become a so-called 8 train on a monthly base. So it seems this area gets rejected by the market and it's really strong, and we have a good potential to have a further up move here on the monthly base. What is on the weekly chart? We are in a neutral phase here. We see since a long time, so there is no overheating into the long direction. We have the up move. Sorry, wrong one. This one. So we have here the up move. So now here we are in the correction, which is again this crisscross around the SMA 20, and here we almost broke the relative high from the past. Now correction, and here we see this single bar retracement into the long direction on a weekly base. So we have here the so-called trampoline pattern, which is always after a crisscross, indicates that these highs could be broken into the long direction. Daily, so what do we see here? The idea comes out of the weekly chart. So what are we doing here? We see that the SMA 200 on a daily base gave us support. The market went up, and now what needs to be done here would be good to see a corrective pattern here back to the SMA 20 or to the SMA 8. So if we see here maybe a short continuation of this move, but then the first correction with a single bar retracement or double bar retracement somewhere around here, this would be ideal, because this already would confirm the weekly pattern here, that we have see a good correction and have a possibility to get into the market quite tight again. So here to get in as tight as possible, then around this here, and then you also see how the market could work out from the profit point of view. Seeing back here again, we see exactly how the profit is decreasing to when you get into a trade quite tight with a high number of stocks. Okay, that's from my side. I'm done with my analysis. Martin, what's next on your side?
Okay, last one for today. I'm going to make it a quickie. Okay, this one is a stock that's really not too easy to trade, because it's a penny stock, and penny stock trading does involve a lot of risk. So this one only has a market capitalization of around 370 million US dollars. So that's really a small stock, and so relatively small orders could move the market quite a big way in terms of percentages. And we can see it here. It's an Australian company actually. If we take a look at the 7-day return of Jervois Mining, then we can see it has lastly a move of around 10% over the last 7 days, while the overall Australian market only did 2%. And when we take a look at the last year return, we're in the phase of more than 240% of profit for JRVMF, compared to around 30% on the Australian market, or 40% for the metals and mining sector in Australia. So now we know what they're doing already because we're comparing it to the metals and mining sector. What they are doing exactly is that they're exploring for cobalt, nickel, copper, gold, something like that. But most important for this company is exploring for cobalt. The flagship project is the Idaho cobalt operations. So it's cobalt mining in Idaho, and cobalt is something that's very important at the moment because more than 40% of the worldwide cobalt production is used for rechargeable batteries, and another 20% is used for so-called super alloys, and that's really important for everything like electrical vehicles and all of the electrical stuff we are using that has rechargeable batteries or accus or something like that. So cobalt is really important for the near and the long-term future of the involvement of our markets. That's why I really like this one. Also, we can see that the company is growing like very fast. We have a forecast of annual earnings growth of around 64%, revenue growth of around 60%, but it's important to know this company is not yet profitable. It's expected to reach profitability around 2023, somewhere around this time frame. So mining break even maybe in 2022, maybe still having a small loss, and then in 23 beginning to get profitable. But it's not really a big deal, because what I really like about Jervois Mining is that they nearly have no debt. So everything they invested came out of cash flow, nearly no debt. So the risk evolved in companies that are not yet profitable is relatively small in Jervois compared to other companies that are not yet profitable. And if we take a look at the chart, we see why it caught my attention here. You can see it's the US stock is trading for 44 cents at the moment, and on the weekly we can see that we came out of this nice triangle here. Very bullish breakout, very bullish continuation pattern in the last week. We do have this weekly RSI reaching the power zone again, reaching 70 again. And if we just take a quick look at the last times where the weekly RSI reached the 70 area, this was here and here. So afterwards we saw quite strong up moves in the stock. While the stock was breaking out above an important last high. It was in this case, it was here in this case, breaking out above this last important high. RSI on the weekly reaching the 70 area, stock moved up really dramatically. So I would expect something similar here now as well, because we're in the area of the last highs. We saw the beginning of the strong momentum move. We see the RSI reaching the power zone, the 70 zone. So I would expect this move to continue to the upside. And daily chart, yeah, same pattern here. We see these last highs. We see the price reaching the last high, getting rejected on Friday. Not a big deal, but take a look at the volume. Yeah, this volume is really big compared to the volume we had on the trading days before. Exact situation as we had it in here. Price reached the last highs, got rejected. We had a big volume in the market, and afterwards the market exploded to the upside. So maybe we can see the same here again. So this breakout to the upside above 45 cents would be quite a bullish breakout as far as I'm concerned. But keep in mind, this is a penny stock. You could only trade it if your broker allows you to trade in penny stocks. Some brokers don't allow it. With some brokers you need some kind of bigger accounts or more experience in the market, because this is really a risky business, trading penny stocks. So keep that in mind if you think this situation might be interesting for you. The risk involved is relatively high, so trade relatively small positions. Okay, so that's it so far from my side. I hope you had a good start in the trading week for this week. For most of the traders, I think it would start tomorrow and not today. So take your time to prepare the charts that we showed to you. Take your time to think about what is your risk perspective for the market, what is your time frame, what is it that you can afford to lose on a per trade basis, and definitely act accordingly. I would be very pleased if you would be here next Monday again as well. And yeah, that's it so far from my side. Take care. I wish you a great trading week, a lot of profitable trades, and see you next Monday.
See you. Bye-bye.
Bye.